heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Chinese tech stocks enter a bear market. Baidu, PDD under pressure following earnings results. Meanwhile, Amazon boosts its stake in Anthropic, investing another $4 billion in the OpenAI rival. And the CEO of Binance discusses Bitcoin near $100,000 and the impact of a Trump White House. But first, we check in on these markets that little bit of just caution and sensitive trading on the last day of the week. We're up 0.1%, but in fact, the Nasdaq 100 is up 1.8% for the last 5 trading days. We're making up some of last week's sell-off, and more broadly, we are up for the month of November. We're looking at the Golden Dragon over in China. We've seen the trade be on the downward trajectory, in particular the Hang Seng, for example, being sold off. And I'm looking at the tech-focused US ETFs and other areas that you can really track how Chinese ETFs, Chinese tech names are doing. And when you look at the Nasdaq Golden Dragon, here we're off by 1.8%. We want to dig into what's the anxiety that's brewing in this particular index, now technically in the bear market. We've got Baidu, we've got PDD, for example, really on the lower side due to their earnings weakness. They sold off in trading in China. We're off by 2.6%, as you see on the US ADRs. These are both US ADRs for PDD as well, off by 5%. All of this as we see that PDD, for example, pledging to keep investing amid rising competition in home and abroad, but it's competition and indeed a Chinese economy that continues to weaken. We go out to Henry Wren, who's based in London, and just talk us through what seems to be ever-mounting pressure on Chinese tech names.
Yeah, so maybe we can start from Baidu, and the nation's biggest search engine operator. And clearly a tough quarter for Baidu because we saw the revenue decline by 3% in the quarter, which was the weakest growth pace that Baidu has seen in more than 2 years. And that weakness was clearly driven by its core business of online advertising and marketing. That part declined revenue by 5% in a quarter. And CEO Robin Li on the earnings statement said that the macro has been weak, while CFO on earnings call acknowledged that despite Beijing's stimulus measures in late September, consumers are still cautious and advertisers' spending are still subdued. There are still silver lining though. Baidu's AI business, AI and cloud business is still growing revenue by double digits, but there are some concerns on monetization as well because those AI-driven search queries are monetized at a lower rate and that compare with general queries. And competition is of course stepping up with other platforms such as short-form video platforms like Douyin and Kuaishou gaining more user attention as well.
Let's just talk about the competition also for PDD as well. And look, both of these companies, PDD in particular, has been trying to make inroads into a US consumer. What seems to also be depressing some of these Chinese names is the fact that perhaps US investors are going to be less likely to be able to access these sorts of investments. You just look at what's happening with the governor of Texas trying to limit that at the moment. That seems to have sent a shiver down the spine.
Yeah, that indeed hit investor sentiment again for today's trading. As to PDD, the competition is stepping up. We're talking about domestic business in terms of JD, and Alibaba keeps on investing as well, but also overseas for Temu because Amazon is stepping up its game as well. So on PDD's earnings call, the company said again for the second quarter in a row that it needs to step up investments to keep up its game versus competitors. And we have been seeing this in the results as well because its margins has been trending downwards again for this quarter. And the company needs to reimburse more in terms of its merchants, giving merchants more perks, reimburse merchants fulfillment costs, as well as lowering the technology service costs for those merchants as well. So clearly, it's reimbursing more, the margins is going down, and it needs to keep up its growth to invest more, and that has hit investor sentiment.
Henry Wren with the inside track on what's happening with Chinese tech names. Let's broaden out the conversation now. Leo Chu is with us, Chief Investment Officer for Thematic Innovation Equities at AllianceBernstein. And we want your read across just generally sentiment around international technology names. But when you look at China, I know that within the ETF that you particularly manage, there are some companies with exposure to China. How do you feel about the economy? How do you feel about the consumer there?
I think it's we do our stock selection pretty carefully. We look at where they're exposed to. Rather than making a macro call, we look at what they're exposed to and then whether they have competitive pressure there. And our ETF and a lot of stocks we invest in, broadly speaking, are driven by secular tailwinds. So regardless of economic outlook, cyclically, we believe the selection that we have, we select them carefully, will enjoy sustained growth tailwinds, and that's how we do it one by one, really.
And when you're looking at the one by one tailwinds, how much you have to bake in the anxiety around a headwind of geopolitical tension, of a new administration that comes in that makes relationships with China ever harder, particularly for US exporters?
We certainly are not here to make any predictions about political outcome or policies. It's a very difficult thing for us to do. But rather what we do is we do take into consideration in terms of the risk factors, if they are exposed, and we certainly will increase the discount rate when we think about the valuation. But then again, it goes to one by one and see how they are positioned.
Okay, well, when we're talking, therefore, more thematically, are the tailwinds for you still all about artificial intelligence, whether or not a particular chip maker has a large exposure to selling their very high-end chips into China? The tailwinds are so strong that at the moment you can still stick by these names. I know you can't go into individual selections, but I mean, we've all been talking about NVIDIA this week, for example.
When we look at these companies, what we look is the overall exposure. So China is part of it, but China is not the sole driver for the growth. So when we look at it, we can see, NVIDIA, for example, China is part of their business, but that's not the majority of their business. And the other parts of the business is so strong that, we can do scenario analysis whether or not China goes up or down, what does it do to the overall. And then given the supply-demand constraint, the constrained environment that we're in, they can easily reallocate to other areas. So that's kind of really how we think about it, is the overall geographic exposure.
Let's talk, therefore, about the hype cycle that we've been in, the huge valuations baked into certain AI-exposed names. You're comfortable with that at the moment? You feel that the demand is so strong that, and indeed supply issues are limited, that you can continue to plow money into companies that have risen so far, so fast already?
What we think about it is on the valuation front, what we care is over long term, can they sustain the profit pool? Who has the pricing power? I think that's what ultimately matters. In the fast-growing phase, some of these companies will look very expensive, but we really need to look out over the 10-year horizon. Are they going to be the market leader? Do they have competitive differentiation? Therefore, they can garner a bigger part of the profit pool. Not every single one of those are going to be a winner. So it's actually a great time for alpha investors, frankly. You get to choose the one that you truly believe in. And then there are ones that's frothy that we do not believe in, and we choose not to invest in them.
Well, you've got a whole array of winners for the last year in the AB Global Disruptors and International Technology portfolios that you manage. Nature Chief Investment Officer for Allianz Bernstein. It's always great to have her expertise and themes here. Meanwhile, coming up, Amazon boosting its stake in Anthropic. We're sticking on AI, folks. This is Bloomberg Technology. Let's talk about antitrust and Google, because the latest is that perhaps the tech giant will be forced to unwind its partnership with AI startup Anthropic if a federal judge accepts the US Justice Department's proposal to resolve this landmark antitrust case over online search. Let's dig into all of it. Adam Kovacevic is with us. He's CEO and founder of the Chamber of Progress. For more on your expertise, look, we must make clear that you used to work for Google. You really helped think about strategy and lobbying there, and now you are CEO of one of the key tech lobbies out there, Adam. So we know which side of the equation perhaps you're coming from. But did that take you by surprise when the UK has already said, look, we're okay, we're at ease with this Anthropic investment, but then the US takes a second look?
Absolutely, and you're absolutely right that I think a loser from these remedies would be Anthropic, the AI startup. The DOJ wants to unwind Google's investment in Anthropic. They want to go beyond that. I think it's a testament and a symbol of how sweeping these remedies are. And I think one of the things that's kind of interesting about this case is that, it was brought by the first Trump administration. I don't think they cared that much about the search default deals, but they wanted to kind of punish Google. And now I think what you see happening now that Biden's Justice Department has won the case, they don't seem that interested in the core of the case, which is really search default agreements, and instead are treating it as a kind of vehicle for pretty broad sweeping changes to Google's business, like unwinding things like their Anthropic investment.
The main one that Bloomberg had been reporting on and then was indeed substantiated by the DOJ was the selling off of Chrome. And many would, like you said, this doesn't seem to be going into the payments that were being made to Apple or to Samsung and other Android device makers to make Google search the default. But the fact that Chrome has about 60% market share when it comes to the browser market, and then a lot of people access search through it, would it not be a good idea to start peeling off some of the ways in which it dominates in search?
Well, the key point is that if the Justice Department thought that Chrome was a problem, it should have included Chrome in its original argument. That's the strange part about including it as a remedy. The DOJ never brought any charges against Google over Chrome. They never made any allegation that Google had, improperly preferenced its search engine in Chrome, but now they're invoking it in the remedies phase. So I think it's coming out of left field in the way the judge will reject. Look, Chrome is clearly very valuable for Google as a way to encourage people to spend time on the internet. It's good for Google's business. That's clearly true. But the idea that, it's valuable to other people, I just don't think, it doesn't have any revenue of its own. It's not valuable if it's decoupled from Google's search results. Frankly, I just think it's very unlikely. I think it's about as likely that Google will be forced to sell Chrome as, Elon Musk's Doge commission is actually going to make the government more efficient.
That's taking us into a completely different avenue, Adam, so we'll get to that in another time. But I'm interested more broadly in some of the other areas. I mean, ones that took perhaps people aback was the idea that they'll be forced to license, sell off, or at least hand over their data, unique data, to other rivals, even as large a rival as Microsoft when it comes to the world of search. How technically feasible is that? And ultimately, how pro-competition is that sort of an outcome?
Yeah, well, I think technical feasibility, what the Justice Department has said is there should be a technical committee that really has full access to Google's source code, and that's obviously very invasive. You're absolutely right that things like spinning off Chrome got a lot of attention, but if you look in the details of this filing, you're absolutely right. They're proposing that Google have to make its secret sauce algorithms available to rivals, share its users' data with rival search engines, including, by the way, foreign search engines like Baidu and Yandex. There actually is a provision in there that would make Google pay for consumers to switch to competing search engines, which is like Pepsi paying, their customers to try Coke. It would make them fund paid advertising campaigns for rivals like Bing and DuckDuckGo. And I think of all these extreme remedies, I think they would not only deter Google from continuing to invest in search innovations if they have to share everything, but they're so extreme and they're so beyond the judge's findings. They're a bit like prescribing an limb amputation just because the patient has a hangnail.
The arguments you make are very clear, and we therefore try and play devil's advocate here. Me as the consumer, would any of this be good for me as a consumer if indeed Google is forced to open up? Were any parts of the ideas coming from the DOJ a remedy?
Well, I think the vast majority of people just want their search engines to work, right? And they want their search engines to answer questions for them. And, one of the things I think is interesting is that obviously the AI layer that Google's building into its search engine is a direct response to the success of things like ChatGPT. We saw a news report yesterday that OpenAI was going to probably build its own browser. But these remedies would take direct aim at that. They wouldn't allow Google, for example, to put in AI-generated results into its search results. And so I do think that would be a pretty direct violation of the consumer welfare standard, which has really been kind of the lodestar for antitrust enforcement. I concede that all of these remedies would be great for Microsoft and great for DuckDuckGo, but that's just not the way we historically do antitrust enforcement in the U.S.
Many had felt that actually there had been a slight changing in viewpoint of how you do antitrust in the US, particularly under Lina Khan and under now the current DOJ. What's notable, though, is this is going to change. We've got a new administration coming in 2025, and it's likelihood is that Jonathan Kanter, who's been leading the charge on this particular case, hands over the reins. Do you think anything changes on the back of that? As you mentioned, it was the Trump administration that first brought this case.
That's right. And I think, frankly, the fact that Jonathan Kanter is on its way out is probably the main reason why these remedies are so sweeping. He's not going to be around for the trial about the remedies next year. A lot of the attorneys who've been prosecuting the case are, shopping their resumes around Washington. Trump's going to have a whole turnover in agencies like the DOJ. So Cantor doesn't have to own what happens next, and I think that's why he swung for the fences. I do think it's an open question about what the Trump administration will do. Trump named Pam Bondi, the former Attorney General of Florida, as his next Attorney General. She will then decide who the head of the antitrust division will be. And there might be slight changes. I think that Trump likes having cases against big tech because, frankly, they provide him some kind of punishment or leverage over big tech services. But there might be changes in how they manage the case, might be different approaches to how they approach things like remedies.
Adam Kovacevic, we thank you for the expertise. Chamber of Progress CEO on all things Google. Meanwhile, look, we were just talking about how Google might have to unwind its Anthropic investment. Well, another company is piling in there, Amazon, pumping an additional $4 billion in its stake in Anthropic. And we know that it's the builder of Claude generative artificial intelligence software, a key competitor to OpenAI. And Bloomberg's Matt Day is here with more. And Matt, when you saw this extra enormous set of money going towards Anthropic, what did you think?
Well, we knew Anthropic was raising money, but this really underlines for us that Amazon has gone full bear hug on Anthropic. You know, much like Microsoft pumped a ton of money into OpenAI to get some exclusive rights and sort of preferred cloud provider for ChatGPT. Amazon has decided that, you know, hey, Claude is a good enough product that if they can, you know, seek to tie it to their platform, they're gonna do that.
How exclusive, therefore, will Anthropic be? We know that actually Google currently has an investment that it's hoping to keep in it.
So Anthropic can still run on other clouds. It's not like the Microsoft OpenAI deal in that regard, but one exclusive bit that Amazon has been pushing for is Anthropic using more of Amazon's hardware to train its models, right? This is a key differentiator Amazon thinks for its cloud in the long term. They think if Anthropic can help them make a really good AI chip, then, you know, that's just another advantage for a cloud platform that already brings in a ton of money for Amazon.
And they're spending a ton of money. Matt Day, great to have you. Thank you. Time now for Talking Tech. First up, Paramount is promising a $1 million retention bonus to its head of government relations and of human resources. That's all pending on the merger with Skydance. Just last month, Paramount announced that its 3 co-CEOs will receive $3 million in cash bonuses, even if they no longer are with the company. Plus, DirecTV has notified EchoStar that it intends to terminate its acquisition of Dish Network. This is after the bondholders failed to consent to a key debt exchange, effectively killing the deal that would have created the largest pay TV provider in the United States. And Apple is readying to revamp Siri. Now, according to sources, the tech giant is developing a more conversational version of its digital assistant, basically aiming to catch up with rivals like OpenAI's ChatGPT. The new Siri is said to use more advanced LLMs and will have the ability to handle more sophisticated requests. Now, talking of AI leaders and safety institutes are gathered in San Francisco this week to discuss the impact of artificial intelligence on society. But one looming topic dominated conversations. What will policy look like under a second Trump administration? For more, Bloomberg's Shireen Ghaffari joins us now. And you were there alongside, Secretary Raimondo and an awful lot of heads of various AI safety networks and comings together. What are we currently thinking about? That maybe the US version of AI safety is dismantled in some way?
That's right. So we had a who's who there. You know, we had tech leaders like Anthropic CEO Dario Amodei, officials from international countries around the world who have all just agreed to be part of this international consortium of different AI safety institutes. But the looming question of uncertainty is what will happen on the U.S. side to its own AI safety institute that was leading the talks. If there is a new administration that will take a different approach to AI policy.
Elizabeth Kelly, currently heading up that institute, what did she think of the future of AI innovation and guardrails under her next administration?
Right. So she really made the case that despite the fact that incoming President Trump has said that he will repeal his party rather, platform has said it will repeal the Biden executive order on AI, Elizabeth Kelly really made the case to me in an interview on the sidelines of the conference that this safety institute should not be seen as a politicized group, that it is part of a nonpartisan, larger government institute called NIST, which is all about evaluating evaluating and making safety standards. And they've long been doing this for things like facial recognition technology, for example, measuring how good it is and what the risks are. And so she's saying that, look, no matter who's president, we're happy to be continuing our work as we have. And, that's sort of the best case scenario, is that this work continues. But the big question is that if incoming President Trump does try to take a different approach, repeals the EO, will we see change with this institute as well?
How disconcerting is it for AI companies trying to build in what feels like a bit of a vacuum of direction? Because I know that very positive words were said about the AI Safety Institute, the US version, by, for example, the leaders of Anthropic.
Yeah, it does provide some level of uncertainty, because what these companies don't want is a patchwork of legislation in all these different countries. And of course, the AI Safety Institute isn't doing actual legislation, but it is providing some kind of standardized testing to say, this is how you make sure that this is how we can say your models are actually risky in terms of biological threats or cybersecurity threats. So if they're having to run, 100 different tests for 100 different countries, and the US's version of those tests is constantly changing, that's not good for them, right? So it's in these companies like Anthropic and OpenAI's interest to have standardization, and they're calling for the Trump administration to keep the US AI Safety Institute.
What about more local government officials? You've been interesting in reporting that Sam Altman, for example, going to be helping the new San Francisco mayor.
That's right. So at a local level, Daniel Lurie, our new mayor here in San Francisco, has appointed Sam Altman to be part of his transition advisory team. He's said in a past interviews that Sam Altman is one of the most important people in the world, and he's living here in our city. So, there's an obvious incentive, I think, on both sides for the mayor both to, take advice from someone who's so powerful, and also for OpenAI to be a potentially bigger part of civic engagement here in the city.
Shireen Ghaffari, we thank you, All Things AI. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a quick check on these markets. Halfway through the show, almost halfway through the trading day, we're up 1.5% over the course of the trading week on the NASDAQ 100. Best week since, the start of the month, when, of course, we learned the outcome of the election, when the NASDAQ 100 rallied more than 5%. We're making up some of last week's erosions. Let's move on to some of the individual assets and indeed names under the hood. The NASDAQ 100 is actually down on the day, just slightly, but largely because of NVIDIA. It's the biggest points drag. We're off by more than 3% after earnings came after the bell on Wednesday night, and we seem to shake off some of the anxiety in yesterday's trade, but as we head towards the weekend, maybe a little bit more of profit-taking happening on this name. Bitcoin up 0.7%. We're at 98,741. The ramp up has been extraordinary in crypto since the outcome of the election, and it continues to be a risk on asset of choice. Meanwhile, if we want to play getting some sort of proxy effect of Bitcoin, many have turned their attention to MicroStrategy. We're up another 8%. Remember, it sold off yesterday after Citron Research came out and said, look, even Michael Saylor himself would say that this stock has run too far, too fast. It's time to perhaps bet against it, even though 4 years ago they'd said use it as a Bitcoin proxy. But for now, we've got to dig in a little bit more about what's happening with MicroStrategy, and indeed what's happening in terms of leveraged ETFs around the name. Look, over the last 2 days, we're off by 9%. That's going to hurt if you were perhaps in these 2x ETFs, the ones that are dining out on leveraging any move that happens with MicroStrategy. But it's actually proving a pain point for some of the banks that are trying to make the markets around these ETFs. Bloomberg's Denitsa Tsikova is here with us. So just talk us through who are the players that allow you to go 2 times a move on MicroStrategy, and the difficulties that they're having, with some of the swap market around it.
Yeah, so it's very interesting that these are very recent players. They weren't around just a few months ago. They actually increased their leverage. So currently, there are 2 main big ETFs that have 2 times the exposure of MicroStrategy, which means they obviously go up when MicroStrategy rallies, but also the losses can be quite steep. And what we have seen is actually from a lot of trading desks, including Nomura and other people on the street, actually flagging the effect of those 2 ETFs which are now around 4 billion, which doesn't seem that big, but the amount of risk and leverage exposures they take is quite important.
Yeah.
The way they do it is they do it via swaps, and that has become a problem. Not many people are ready to take that risk and to follow that volatility. In fact, there are 3 prime brokerages one of the ETFs is working at the moment, and it's really hard to get more leverage going forward to chase that rally and potentially, obviously, if we go down.
So just get technical for us for a moment, because there are a lot of retail investors who are in these leveraged ETFs. I'm hearing from neighbors about how they're taking options out on some of these leveraged ETFs, and it makes the eyes water. But basically, when trying to fulfill the promise of these instruments, the risk limits of a prime broker are being tested. So what is the ETF manager to do?
Well, the ETF managers can also, we've seen a lot of people use co-options sometimes to chase that upside, or just being limited with very few prime brokers. But the way those product works is that they often rebalance within the last 30 minutes of the trading day. So if you look a little bit deeper in some of those charts, you often see really big durations in the last 30 minutes, which is what actually trading desks are looking at. And for example, if you've seen a big up day, a lot of those products need to buy a lot more of the underlying stock or some kind of exposure to it to chase back to the needed exposure to have 2 times leverage. So we've seen that really big effect in the last 30 minutes, which can be up or down depending on the move.
T-Rex 2X long MSTR daily target ETF. The ticker is MSTU. There's also Sylvia Jablonski, who we have on the team often. She runs the Defiance daily target 2X long MSTR ETF, ticker MSTX. Fascinating. Denitsa Tsakova on all things MicroStrategy and the leverage play there. Meanwhile, digital assets being flagged as unregistered securities by the SEC are rallying after the agency's chair, Gary Gensler, announced that he plans to step down. Crypto supporter Donald Trump, of course, has vowed to fire Gensler, who now intends to exit in January on his own accord on the day the president-elect is due to be inaugurated. Meanwhile, Bitcoin's wild ride has been continuing. We know it's near that $100,000 level, very psychologically important. And the cryptocurrency surging since Donald Trump's re-election. Binance CEO Richard Teng sat down with Bloomberg's Francine Lacqua to discuss the impact of the second Trump administration on crypto markets. Take a listen.
President Trump being elected certainly give a boost and give greater clarity to this. But I will say that 2024 has been a landmark year, and that momentum started earlier this year. So if you look at what happened in January this year with Bitcoin ETF being approved, firstly in the United States and then subsequently all around the world, from Brazil to Canada to Australia, Hong Kong, and the list goes on. It gives a lot of recognition and finally the respect that this sector deserved all along. And with the likes of all the largest money manager and all the top financial institutions around the world starting to recognize the value of this space. You have Larry Finn, CEO of the largest money manager, BlackRock, in the world, that went from a crypto skeptic to a crypto believer. I think that itself speaks volume. So if you look at the Bitcoin ETF, it's the best performing ETF so far in the history of ETF, right? Again, it shows that institutionalization has started and mainstreaming has started.
Could the Trump administration change everything for cryptocurrencies?
Well, it's a big positive. I think the last 4 years, especially if you are in the United States, I think the last 4 years has been pretty tough, right? In terms of, regulation via enforcement, which is not necessarily the best form of regulation. But we have a very pro-crypto president. And if you look at, it's not only President Trump himself, but the House of Representatives, 2/3 of the legislator being elected are pro-crypto. Same story is happening at the Senate level. Many pro-crypto legislators and policymakers are being elected.
Binance CEO Richard Teng there speaking with our own Francine Lacqua. Now, just a note and a reminder that Binance itself remains under a consent order with the formal monitoring requirements in place. Plus, there is an ongoing SEC dispute, but none of its current C-suite executives have been charged in the most recent round of indictments. Now, coming up, we'll talk about where enterprises are allocating their dollars when it comes to AI. Menlo Ventures, Tim Tully's with us. This is Bloomberg Technology. Still private, fintech giant Stripe is again buying back some of its shares at a roughly $70 billion valuation. The deal is likely to see hundreds of millions of dollars in shares change hands, according to sources. Bloomberg's Katie Roof joins us once again with yet another secondary market activity, Katie. And just who are they purchasing from? Who needs the liquidity?
So this is actually for ex-employees rather than current employees, and then also venture capitalists and other large investors. So Stripe has done several tender offers. This is, I believe, at least the third one this year. This is different than the Sequoia one a couple months ago where they purchased a lot of shares. Our understanding is it actually could be Stripe itself buying back a lot of its shares. And this could be a potential move to clean up their cap table in case they want to IPO someday.
Okay, clean cap table always helps. Talking of potential IPOs, you were reporting on one for 1Password.
Yeah, exactly. So 1Password is having early conversations with banks. Our understanding is they're hoping to go public next year. This is a Toronto-based company, the password management business. They've been around for a while. They originally bootstrapped, and then they started taking outside capital maybe 5 years ago. Excel was knocking down their door to get into that one, and now it looks like they're getting closer to providing a liquidity event for their shareholders.
Ooh, some activity ahead. Katie Roof, we appreciate it as always in all things VC-backed investments. Let's stick with VC now, because investment in AI native applications, get this, it reached $4.6 billion in 2024, almost 8 times what it was in 2023. And it's all coming from the latest insight report from Menlo Ventures, who are looking at where enterprises are spending now on generative AI and where it is all going for 2025. Tim Tully, Menlo Ventures partner, can deep dive with us a bit now. And it's interesting the amount of conversations I'm having that are pivoting away from the infrastructure, the large language models, over to where in the application layer this is going to be most valuable. Where are you seeing that activity to write checks to applications in generative AI?
Yeah, just to be technical for a moment, a lot of that is driven by the fact that these foundation models are translating text into other text well. So what you're seeing is the money's flowing into places where applications can do well with text, as you can imagine. So that's really legal tech, it's healthcare, it's fintech. And largely that's because the architectures are settling in terms of how developers build applications. In 2023, folks were still trying to figure out how to build applications using generative AI. That has changed greatly in 2024 as applications move into more agentic architectures.
What's been so interesting is, for example, you're an investor in Inanthropic. We announced today that Amazon is taking another $4 billion cash infusion into the business. It really wants to make it a bedrock of bedrock. It wants to really ensure that it's offering its own, well, cloud technology, but to other clients with the help of Anthropic, but also having Anthropic train its own data on its own chips. What's interesting, I'm talking to some generative AI application makers, and they're saying the support coming from cloud providers for their businesses too is extraordinary. How are you seeing these application makers also dining out from Amazon, Microsoft, and the rivalry there?
Look, it's really, really expensive to train and provide inference for these things. And seeing a $4 billion cash infusion from the likes of Amazon is not shocking at all. I think it's great for developers who sit in the Amazon ecosystem. They've already been blessed to use services within that ecosystem, and to move over to Anthropic, I think, makes things really, really easy for them, and Anthropic is obviously benefiting from that.
Just from the research that you've done, are we seeing money stop going towards these foundational layers and instead finding a new home in the application makers? Or are people still writing checks in both directions? It's just very different valuations.
Yeah, it's going in both directions still. You saw in the report, the amount of spend in foundation models went up 6.5x from $1 billion in 2023 to $6.5 billion in 2024. That's a huge increase. And then, as you mentioned earlier, we saw the amount of spend in the application layer go up about 8x to about $4.6 billion in 2024. So the dollars are flowing in both directions, frankly.
And you mentioned some of the sectors where this makes most obvious sense. And we've had a lot of these startup founders on the show that are particularly helping serve the legal industry, the healthcare industry. How much money are you starting to see these ultimate end clients purchasing? How much are we seeing product market fit? How much are we actually seeing clients spend money on these products?
Oh, I think that we call it PMF in the venture industry, a product market fit, that, it's definitely there, right? I have a legal tech startup called Eve that's seeing huge benefit from plaintiff side case management, and the throughput is definitely there. So, plaintiff side lawyers are getting the benefit and they're spending the dollars, and like you asked earlier, the product market fit is certainly there right now, and people are buying up and slurping up the software left and right. So we're really excited.
But everyone keeps on questioning return on AI investment. Are these companies in healthcare, in the legal services, finding that it's productivity that gets boosted? What else is giving them the return?
Oh, absolutely. I mean, they're not going to be buying the software for not getting the value. So, we hear it anecdotally from folks that they're getting tons and tons of value out of the software, and the spend is just increasingly rapidly. So you can imagine that the value is certainly there.
Push us forward, because where is the next vanguard of money to be made within the AI hype cycle or AI reality, Tim? Where else are you looking to put money to work?
Yeah, I mean, it's really focused around the application layer right now. I think architectures, like I mentioned earlier, are settled. And because the architectures are settled, it makes it easier to build the applications. And so you're going to see the velocity of applications come out much more quickly. So, I think legal, definitely workflow, automation, chat, customer support is certainly a space, marketing, human resources. So I think really any vertical right now is ripe for a disruption for AI right now.
Tim Tully, come back when you're starting to write even more of those checks to some of these new companies. Menlo Ventures partner, it's great to have you on.
Creators from all around the world come to TikTok to be discovered. They find an audience, they live their dreams of fame and fortune. Now, in addition to launching countless global stars, the discovery and authenticity that define the TikTok experience have also made the platform a home to serious issues that are vital to the global good.
Talking up the positive angles of TikTok there, the CEO, Shou Chu, recently speaking at APEC in Peru. Back in the United States, questions about the future of the app continue to loom. That's as lawmakers are potentially going to be looking at changing all of it within the administration. Right now, in Washington, Project Liberty is hosting its inaugural summit on the future of the internet to explore how policymakers and citizens can come together to create a better online experience for all Americans. Here with the future of TikTok and the internet writ large, Frank McCourt Jr., founder of Project Liberty. And before we get on to your bid and interest in TikTok, just tell us a little bit more about the summit that you're having, because it's all about trying to have, whether it's lawmakers or whether it's TikTok creators in and of themselves, talking about their experience on the internet and how it can be improved, right?
Yeah, exactly, Caroline. Nice to see you again. And it's a really a great gathering of many different people, nearly 500 people here, almost 100 speakers, really brilliant people who are really concerned about our broken internet and want to fix it. It's not just complain about it. And so, as you pointed out, it's an array of folks, not just technologists or just investors or just influencers or just parents. It's all of the above, plus others. So the conversations are really extremely interesting, and the level of energy is very high because people are talking to people they otherwise might not be talking to if they were just in their own bubble. So yeah, and it's very solutions oriented. We're making a number of announcements yesterday and today, and yeah, I'm thrilled with how things are going.
Well, let's go to solutions, because day one was held at the McCourt School of Public Policy. Therein lies the idea that this might have some sort of policy solution, and you had lawmakers such as Nancy Mace, Republican, and Democrat Ro Khanna sat down together to discuss it. Is it about government intervention here, or is it some other solution?
Yeah, well, the point I made yesterday, and I had the privilege of helping start that school a decade ago, is that, I started this adventure thinking that maybe policy intervention was the answer, that you could see a decade ago that the internet was headed in not a great direction, and it could do a lot of harm, which it has subsequently done. And thought, well, maybe we can help get the policymaking apparatus to get out in front of this. Turned out that big tech is, policymaking is no match for big tech. Big tech is too powerful, it's too fast, it's too big, it's too rich, it has too much influence, quite frankly. So that's when we launched Project Liberty 5 years ago, to actually reimagine how the internet works, build the technology, bring in partners from all over the world who share the same concerns that we have, which is, the data that is now driving the internet is being scraped from us all. It's being aggregated by big platforms. Algorithms and AI are being applied to it, and we're all being, stripped of our humanity, and never mind the value we create. So, think of data as personhood, and we need to reclaim ownership of ourselves. We should own and control our identity and our data. That's fundamentally the point. And now, thankfully, lots of people around the world are recognizing this and wanting to build this new version of the internet. And that's what this is all about.
I want to recognize, though, on the flip side, that a lot of this social media has good in it, has connections, helps people who feel alone in certain parts of the world who don't see identity that they resemble near them, find community online. There's businesses that are built on these social media platforms. So there is positive as well as some of the harms. And I'm interested as to when you look at making a bid for TikTok, for example, how you support the positive at the same time as having some sort of decentralized social network protocol that allows people to perhaps keep their identity a little bit more.
Yeah, there's massive good that can come out of technology, massive good that can come out of social media, but we don't have to have all the bad as well. I mean, it's not like, hey, this is some good, so let's accept the bad. We want to have a internet technology that really is amplifying good. It's really optimizing for people. It's really protecting children. It's strengthening democracy. It's helping us get smarter, not dumber. And so what we want to do with TikTok is actually move the user base over. By the way, we don't want to see it shut down either. We want to move the user base over to this open source protocol where people can own and control their identity and their data. And the value proposition is shared with the users. I want to see this, at least a portion of it, Green Bay Packard. And what I mean by that, just as the fans own the Green Bay Packard football team, let those that are on TikTok that create the value own a piece of the platform.
How likely is that with the next administration?
It's a great question. I'm not sure. I've heard President-elect Trump say he doesn't want to ban TikTok either. We're waiting on the legal decision. The Congress passed a piece of legislation really demanding that it either be shut down or banned. It's that much of a national security threat. So I assume that it will be sold, and then we're in a position to buy it when and if it is sold. So we're watching very carefully. We expect the legal decision will be the first week of December, and then we'll see what the new Trump administration does. But we're here ready to buy it. And again, it's not me buying it. I don't want to be the CEO of TikTok. I want the people to buy it. This is a great opportunity to catalyze an alternative internet. And the technology is here. It's working. We have nearly 1.5 million people using this new technology. Now we need scale. TikTok would provide scale.
Frank McCourt Jr., come back after those December dates, founder of Project Liberty. Thank you. I'll let you continue with the summit. Now let's just take a look at what's happened to this market this week. A big round trip for NVIDIA. We're up 0.1% after its earnings came out on Wednesday. We are currently off by more than 3% on the day, but stability in NVIDIA, the world's most valuable publicly traded company, after those results. Nasdaq 100, we're up 1.7% on the week, just making back some of the losses of the previous week, and we're still higher in the month of November, remember. Bitcoin, never ending. 99,100. We are ever close to the psychological level of $100,000 per Bitcoin, up 8% on the day. That does it for this edition of Bloomberg Technology. Check it all out on the podcast, Apple, Spotify, and iHeart. This is Bloomberg.